In today's energy markets, let's take a look at WTI crude futures as they're realizing higher price action once again today. Crude futures higher for a seventh consecutive session. Today we're looking at that May contract, that lead month contract, going to new contract highs. Intraday high of 87.62, currently priced at 86.75, up about 0.25% on the day. And when you look at it from a lead month standpoint, from a lead month future standpoint, these are the highest levels for the lead month future in 5.5 months. And looking at some of the driving factors today, a couple things influencing the markets. Really, the themes throughout the week continue to influence the market today, it appears. That's tensions in the Middle East remaining very elevated, and certainly going into the weekend, it has a tendency to see some adjusting of positions due to the fact that the markets will be closed for a couple of days. And I think that that's one of the factors contributing to the uncertainty surrounding the Middle East as far as supply moving forward. Couple that with data points here in the U.S. throughout the week coming in stronger than anticipated. Today, a very strong jobs number. And I think that that's another factor contributing to the pressure, buying pressure in the WTI space, as the expectations are that the consumer will continue to be very active through the driving season. And I think that that's also providing a tailwind here for the price action today. Now, looking at WTI, it is trading at the highest levels here in 5.5 months now, as far as a lead month future. And again, price action is maintaining this upward momentum as we close out the week. Now, looking at the rig counts, we did get the Baker Hughes rig counts, and we did see actually an uptick in oil rigs by 2, a downtick in gas rigs by 2, so they offset each other. But when you look at it on a year-over-year basis, we are looking at active rigs down 17% from last year. Currently, 620 active rigs, coming down from 751 last year. So there's been a decline of 131 rigs coming offline here in the last year. So again, production here in the U.S. continues to hold at record levels, but we are seeing some shifting dynamic in the rig activity, and particularly in the gas rigs, as a lot of the biggest natural gas producers indicated they were going to be cutting production because of the price action. But we're also seeing it work its way through the oil rigs as well. So even though they did see an uptick of 2 this week, from a historical perspective, we are still seeing rigs at a very low level relative to last year.